Hi, this is Randy Finney with Right Side of the Chart, and this is a late session, well, mid to late session update for Friday, April 26, 2024, 2 o'clock p.m. Eastern Time, 2:04 actually, as I'm starting the video. Just felt like doing another one for those interested and really just focus on the market. A lot of buzz out there, both on the board, in the comment section, and, I'm sure in the, out there and everywhereville, traders with the earnings. But I'm going to just kind of reiterate my thoughts and go over a couple different charts. I'm going to start out with the very short term as I'm starting the video. I'm going to show you where we're at now. And as I do this video, I can't go through the whole 2 hours. I'm not going to make it that long. But I suspect you're going to see from here on out, I think the rally's pretty much run its course. So this is that 60-minute chart of NQ. Might go to, I'll chart QQQ and NQ together, but you still... you have that divergent high on the 60-minute. The yellow line, that's that comparable to the 433 support level on QQQ. It's at about 18. My line's exactly at 18.046. Lots of clean reactions. That's just where the line fit best. You could put a sub line below there, come in and catch. I could add it if I wanted. Right where my crosshairs are, you see reaction highs back here, here. A little spike below there, but the majority were there. So we want to call it that 18, right at 18,000 really. So 18,000, 1850. As I said before, I don't think we'll get all the way there. And then you can also add a line right where my crosshairs are. Here, I'll show you what I'm talking about right here on top of that. We're almost there now. So again, it's just too obvious a level. And of course it could happen. Don't get me wrong, but just too obvious a level to have that perfect test. And maybe we get it, maybe not. There's a downtrend line that comes into play, comparable to the one that NVIDIA is testing today. And, if they get up to 18.046, I'll probably punch it through, but I think we'll dump from now into the close. I'm going to show you why. I'm going to show you where we're at. And also just to kind of keep things, because I see emotions. I see all this, the usual suspects come out of the woodwork calling for new highs in the market. We're not up that much today, guys, and we're still, comfortably off the highs, and a lot of the sell signals are still intact. NVIDIA, given, has been a little whippy today. I'll get to that one, but I'm going to go over the long-term charts here, and let me just toggle over to the 5-minute chart of QQQ. Here's the 5-minute chart with the divergence. And this is a kind of the shorter-term active traders world. Divergent low, pop, divergent low, pop, divergent low, pop, divergent high, drop, divergent high right here. I didn't put the letters and duplicate it. And there's a little divergent high. And again, right under that 433, here you can see it's about 433.70 on my 5-minute chart. And so that's it. Now let's just do this. Let's just play this game. We jump over to the longer term charts. We'll just look at weekly and monthlies. And I just want to reiterate where we're at there, because today is Friday, and by the time I wrap this video up and get out to you, the market will almost be closed. So there are some technically significant things I want to share with you here, especially on the market leading stocks. So on QQQ, I shared with you a few weeks back, we had a trend change indicator, the PPO histogram, meaning the PPO itself made a bearish crossover. That's when the histogram will flip from green to red. Nice trend indicator there. And that remains solidly on a sell signal, if you will, for now. Again, I don't use it as a standalone, but it goes in conjunction with other things. Got the trend indicator flip first, then 433 broke. So that's where QQQ is. Let me park the histogram just to give us the real estate to work with here. And let me just go through the market leading stocks. And I'm going to start out with this. Well, no, I'm doing this. I'm sorry. When I click on my watch list for the Qs, they're sorted by market cap. So Apple used to, forever and a day, held the title as the biggest one in there, by market cap. It's dropped down. It's still big. It's number 2, but Microsoft is number 1 at $3 trillion, the only one in the $3 trillion club right now. And I wanted to reiterate. So earnings, huge earnings, right? Up today, right? This is my weekly chart. This is a weekly trend line I've had. And I'll do this right now in the video. I'll play around with the trend line. But remember, last week we had a close down below there. Given this is earnings week, but here it is. We're going to close, unless Microsoft rockets into the close. All this is a breakdown. And again, you use a weekly chart. The longer you step back on time frames, the more infrequent the sell signals and buy signals are, but the more reliable they are. In other words, I'd give you 5-minute charts a lot for active traders, 15 minutes. That'll get you in quicker on little turns, or if you're timing just short-term trades. But even if you're waiting for a big move, you're first going to get your buy signals on the intraday charts, then it's going to follow on the daily. And what I mean by that, I always say if you're trading off whatever time frame you're trading on, you have to wait for that candle to close to confirm the signal. So in other words, a daily chart, you need to see a daily close below a support or resistance level, not an intraday move. It's very common to get intraday moves and then only to see it not close above or below that support level you were looking at. Likewise on the weekly, and that's where you get these things called shadows on the candle, the skinny part. Those are the intra-period moves. So on a weekly chart, it means you went from that, last week, that to there. And so far this week, you can see we broke down. Now, I will say, benefit of the doubt, and I already gone over many times my level. It's not matching exactly here on the weekly, but this is that trading range on Microsoft. So benefit of the doubt, you want to see that get taken out. But I did want to point out that it did close last week below the trend line. And this week, it's slated to close on a back test of the trend line. Now, what I can do, and I will do here for kicks and giggles. Oh, by the way, I had fibs up. I didn't even mention that before. Right now, we're slated to close. This is the recent high in Microsoft. It almost kissed the 61.8 fib retracement at the highs this week, and it's slated to close right on the 50. So nothing more than a counter trend rally. But again, I don't want to. That's what I wanted to show you here. Is I'm going to draw an alternative trend line to the one I just showed you, and I'm going to come into the bottom. What I did before, I cut off the two candlestick shadows there, the bottom parts, we call them wicks, and I came in like that, and that was the trend line. So this way I can come down here, and I will do that often. I always say the charts are dynamic, and so is my analysis. And I did that because now we had a weekly close there. And so if we look at it this way, Microsoft is above. This is my BOD now, benefit of the doubt trend line. 1, 2, and now if you want to count that close, it's really not a reaction per se, but same with the other trend line. I just want to point that out. We're right there in close proximity. When we go out to a monthly chart, you can see just massive divergence. You usually don't get divergence like that on a monthly chart. The last time we had comparable negative divergences, on a monthly chart, your divergences are going to span years typically because you're looking at monthly candles. And so it's the same premise or, basic charting that we'll use on 5, 15, and 60-minute charts. It works just as well here. It just has a much longer lag time. Not a lag time, actually. It just, the divergences, bullish or bearish, need to develop over a longer period of time. And then they tend to play out for a much larger move. So this is big picture stuff. And so back then, the last time we had a monthly divergent high was back in the dot-com era, and Microsoft dropped initially 66%. It actually went down even lower than that. I guess I measured off that drop there, another 60. And it was dead, actually losing money. Oh yeah, that was the bear market in 2008. What we have now is very clear negative divergence. The PPO hasn't cross hit, but it's rolling over. And, I maintain these longer term targets. And that's why I had back here, created that back a while ago, back in March of last year, saying this is where we're coming down to, I believe, ultimately this longer term trend line here off the 09 lows. First stop long term is going to be 225. And so here I am on a day where everybody's bullish Microsoft. Everyone wants to buy Microsoft. They've just, those holdouts, it seems, again, from just what I heard last night on Bubble TV and all that, just everybody's capitulating. AI is here to stay and these companies are just going to go to the moon. Anyway, that's what I see. I see a whole different story. So watch these, and there it is. You can actually see it easier. When I use the monthly, and if you want to, again, play it safe, there's a monthly trend line, and we're still above that. But that's Microsoft. And again, based on the scope of this pattern, the divergences, everything else, that first leg down, and there'll be stops along the way if you want micro targets. I'm sure very few, if any, even care to short Microsoft, so I'm probably wasting my breath here. But that's, after that initial 15 so percent drop I'm calling for now, which will take the Qs and most things back to their 200-day moving averages. It'll take Microsoft back here to the 20-month exponential moving average, which delineates bull and bear trends in both the stock market and Microsoft. Bullish when you're above it, you want to buy pullbacks to it, and then bearish when it gets taken out. And I suspect after the initial reaction it will, and then that is a 46% drop, and now if and when we hit my trend line, still a 60% drop to my downtrend line. But we got a lot to go there. Let's Microsoft. Remember, I'm picking on the strong now. The weak have already rolled over, so I'm showing you the ones that haven't. Apple, we're on a monthly, so I'm going to stick to a monthly. Just massive divergence. The last time we had big negative on the monthly like this, that big. The last time we had a period was right there. It was only RSI divergence, and we still got a 45%. No, that was here. 34% drop out of it. Then we had it on right there is 45%. But this was the comparable divergence. That was leading up to the top of the market in 2007, late 07, and it gave us a 62% drop in Apple. And we've triggered. It's below that trend line. It's testing that 20-month moving average. But remember, last month, this is a monthly chart. That's a monthly confirming sell signal on Apple. And it's still even deeper red this month so far. Weekly is what it looks like. We're below the key 200-day moving averages. There's a downtrend line. Support. This is that same support I've been harping on, the purple line on my daily chart, the purple levels. But so that's what Apple looks like. And again, this is a check mark. This thing's rolled over and given me quite a few pretty good sell signals recently. Longer term sell signals. We're on a weekly, so now I click over to Alphabet. Kind of the Alphabet and NVIDIA kind of just narrowing it down. They're really the two that are the strongest right now. Well, I'll take that back. NVIDIA peaked. NVIDIA is well off its highs. I'll get to NVIDIA in a second. This is am I correct? Is this the only one making new highs now? Alphabet, big divergences tell me that it's limited, most likely. Last time we had a divergent high there, and again, nobody wanted to short the market, but we were, and these were targets laid out back then. Went down, hit that first target, took it out, trading range. These are now support levels. I don't know if I'll tell you, I don't know if I had that line back then. No, I created that one in 2023, so that's now a support level. Back then, this trend line here, I created that back in 2022 in October, right about when everything topped, calling the stock down to that trend line, and that was the biggest drop you had in many years in Alphabet, and it was from the high right here, which is that 151-ish level. The stock dropped about 45%. Okay, what's my point? Well, technical posture is identical right now, except the divergence is just a little bit bigger than it was back then. So again, this is a breakout that I believe has a high probability of failure in the imminent future. It's a monthly chart. A weekly. So probably in the next few weeks to a couple months at most. If I'm right, and if I'm not, then maybe we just keep going up. And sometimes that happens and the divergence gets taken out. Monthly chart on Alphabet, just massive divergence. I covered that in the earlier video, and there's the have parallel trend lines, but the orange one's your primary trend line. It comes all the way off its IPO back in 2004 when the stock started trading publicly. And just to get there, what I'm doing, if I can't, it's going to have to fall from today's high, which is the high of that candle. Again, if and when it gets there, because this is a dynamic trend. The trend lines are always dynamic. They mean they have a positive or negative slope. So prices are going to come in at higher or lower levels as you go forward in time. And so this one, roughly right there, about 30% drop. And hey, look, guys, you might say, "Oh, you're crazy, Randy. This company just blew it away, and they're going to start paying a dividend." That would just keep it in a bull trend. That would just be a correction in an ongoing bull market. Sooner or later, I think this trend line, which is extremely long in the truth, will break, and then I'll be talking about the deeper targets. Right now, I'm just trying to, for those of you that are still hanging in there, I'm just trying to show you some near-term, likely target. And again, when I'm talking on the monthly, you got to be patient. So we don't have any sell signals on the monthly. Did I already cover the weekly? Yeah, I did. All right, next one up. Let's go back to the monthly. I'm not going to cover everything. I'm just going to cover those Mag 7 or whatever we call them. And there's NVIDIA, also big divergence. Last time we had divergence on the monthly. This charting platform, the indicators start to populate after prices, but you can see you had divergence there. So you had a divergent high back then. The stock dropped 80, almost 90%. Your next divergent high on this monthly chart, you don't get them often. They're rare. It dropped 85%. And this one right here was the last one. We called that down. That was my second target hit on the weekly. I'll get to that in a second. 63% drop. And this one's going to be quite ugly. This one will probably take us down at least back here. The 85% drop is where I think NVIDIA will end up going. And again, I know that's heresy, but look, this stock could drop. This stock could fall all the way down here to that lowest target I have in the trend line. That's almost a 96% drop. You would lose almost all your money, but it would still be in a secular longer term bull market, a bull uptrend, again defined by this uptrend line, higher highs, higher lows. It's just we got very far away. The farther you tend to get away from primary secular uptrend lines, the bigger the drop is for the mean reversion. And so I know most can't possibly fathom that right now. I hear how people talk about this company and how they're just going to be Microsoft and Amazon and now Apple and Alphabet. They're just going to continue to plow billions of dollars, and NVIDIA is the only game in town for their chips. No. There's so much money in this. You're going to see. I'm not making I'm just telling you things that happen. Someone's going to come along, another company or companies sooner or later, and start making chips that are better than NVIDIA. And because there's just too much money to be made right now. And this guy, seems to be reaping all the AI rewards. So that's not going to last forever. So something's going to be the catalyst to take the stock back down to earth. And, in near term, let's go over the weekly. Weekly, what is that going to be? Well, here's my weekly uptrend line. It's a clean one, too. We have so far... nice reactions here. There was that, back there, divergent high, breakdown, back test, weekly divergent high. T1 was hit, we bounced. T2 was hit, we bounced. A lot of things were covering shorts and going long in the market there when T2 was hit. And I still have additional targets, but we're not going to get there until first. Well, we did have, remember, we had this minor uptrend line break with a solid weekly close. We've been moving lower. This is another stock. Again, I think Alphabet is the only one making new highs now. A lot of things have been rolling over, and certainly a lot of them aren't tanking yet. Apple's way down. Tesla, we know, is way down. Some others, like Microsoft, are holding up relatively well. They could punch it back up to new highs soon. You can't write them off until those other key levels that I've been highlighting go. But this is the next level on the weekly for NVIDIA right here, to see that get taken out. And then you have your 200s and then this initial target. And again, that doesn't happen. So let's talk about today. So I covered it earlier in the video. This was our trading range right here. 840 was my big level. We broke it, back tested, rejected. We're as of now, barring a big reversal, it doesn't have to be huge. 4% would park us back on the trend line. And then what that's going to look like, I wish I had a black or racing tool. This would be erased. You just have that skinny. The candle would look like this. I'll draw it right here. You'd have a skinny wick. And you put a little doji back here. The body would be back down on here if we close there today. As of now, remember, you have 840, and like I said, I can't chalk it up as anything but bullish unless that fails. And this is a daily chart here. Let's, number one, see how we close the day. They dump it hard today. Then we could close back down. And we also have the trend line just above. And so if we close today, let's say we only have a mild pullback and we close right on the trend line, it then gives me another third and confirming reaction to help validate it. Otherwise, if we punch on through it, then, well, you got that. That's hard to spin as anything but bullish for NVIDIA. So 60-minute chart, you can see when I zoom in a little closer, you can see the trend line nice and clean here. And so we're hair above it right now, but like I just showed you as I started the video, and I'll follow up before the end. The dump should start now, and take us down into the wipe out a lot of these gains in the close. And if you have a big sell-off today that erases almost most or all the gains in the Qs, that's going to be set us up for hopefully a good gap down on Monday. We'll see. Let's cover a couple more here. So that's NVIDIA. Here's Amazon. I'm on the 60. I really wanted to stick, but I showed you earlier in the video that was where we're at resistance, and so far we stopped cold at it, and that was at 180.23 on the 60-minute chart. Daily, you can see it there too. Here's my weekly. So does Amazon report next week? Yes. However, what I can say, where will they go, up or down? You know my thoughts so far. I'm 2 for 2 on the calls I made this week. For like I said, I didn't get to Tesla before it went out. I would have called that one bullish based on the charts, but I didn't state it. So the ones I listed were Caterpillar and Meta, and both of those got clocked hard. And then Microsoft and Amazon. And I also, remember, please don't forget, it's not the day of the initial day. It's what's the trend emerging from there. Sometimes you get a 1 or 2 day pop or drop before a reversal comes. And so by the end of the week, if Microsoft is at or above where it was, or really above where it was post earnings, then my call on that was wrong. Same ditto for Alphabet. Alphabet's got a lot of work to do, but I'll take Amazon. Like I said, what I'm doing right now, they've got the leaders, the generals. There were 7 generals known as the Mag 7. And one by one, Tesla first, then Apple. We're just checking them off, and need a few more check marks. But I just wanted to point out that this is a very clean uptrend line. It forms that bearish rising wedge pattern. There's your divergence line on Amazon on the weekly. Actually, this one, I'm going to take this line and just fit it back over here on this RSI divergence there. So you've got this. You'd have to zoom in. You can see it, there on the, and we can even do that. It's flat line there, flat line divergence. So you have equal highs on the PPO and higher highs in prices. That's still negative divergence with a solid candlestick breakdown yesterday, and so far nowhere near recovering or even back testing the trend line. Again, this will, and based on the posture of the charts, post earnings will probably come down. My targets. You have this uptrend line right here, the primary uptrend line, the 200-day moving averages, and then price support. So this is my target zone. So I think following earnings from where we're at today, Amazon will probably be down about 20% or so within a matter of days, if not weeks. That'd be my guess. And again, I'm telling you right now, that's my guess. That's a forecast prediction. I'm showing you fact here that it broke down and gave a solid confirming sell signal last week. Can it be negated? Yeah. Sometimes you break down. Sometimes you kick back test, roll over. Sometimes you break down, and then the breakdown fails. But as of now, this one, as of last week, as of last Friday, it's on a sell signal. And this week, that sell signal will remain intact. There's no chance of it being negated again this week. Monthly chart. We go after the monthly chart. Big divergence, leading in the highs in 2021 right here when the Nasdaq peaked in November, followed by a 57% drop. Those who've been around remember that's, we were short, the market and Amazon. We traded a couple times on the daily chart there, as well as at that low. It was actually the weekly I was trading off of. We had several trades off this level here, then this one going low back right in the right here in 2023, and along with Apple and Amazon, I think those two being cited as my favorites, and that's where they marked the bottom. Based on this was just massive support there. You had that big trading range. I don't know how you could have not loved Amazon back then. Positive divergence with one of the leading companies in the world down 57 or something percent off the highs. So anyways, and you can even see that support on the weekly. So we come full circle, bounce off that level. The divergences that were in place that were the technical catalyst, if you will, or precursor to that 57% drop, guess what happened? They didn't go away. They only got bigger. So now it's the same divergence. Prices making higher highs. It made an ever so slightly high, roughly equal, but that's same difference if you have the indicators dropping. And so that sets the stage for a much larger drop. Even if we drop down again, it's still coming from the same levels. You're still looking at least a 57% drop. So, and again, I do these videos and I share my thoughts and I try to get details of why, because I know most can't fathom that. I don't think you'll find an analyst that they will dare march out on CNBC calling for a 50+% drop in Amazon and 50 plus in Nvidia and all this other stuff. And not 2-3 years from now. Most likely this year, and we're coming into the end of April. At least the better part of it will be underway, and then probably this fall. That's usually when the markets really get ugly in October around then. Alrighty, what's next? Meta uptrend line on the monthly, and we're gonna close enough that I have to squint, so we can't call it a win for the bears yet. Depends if you want to tweak it. I could come down here, get the bottom of the candle. No, even then we're close enough. So that's probably the best fit that I had right there. So what I can say, you've got the RSI is starting to, or PPO is starting to roll over. RSIs and PPO are making about equal highs. I'm just going to pull that off. These divergences are kind of wishy-washy, but most important on the weekly, you can see here. Beautiful, in my opinion. I'm sorry, I know I refer to chart. It's like like I'm an artwork buff and I'm looking at the a Renoir, but this is a uptrend line that's nice and clean. There's nice and clean negative divergence over. We had a divergence on the PPO, extreme overbought conditions on the RSI. In fact, never in the history of this stock, since it came public, has it ever been this oversold as it was recently. And usually you get oversold here. That was my previous oversold extreme level, 80. It's at 77.98, so I'm going to round that up and put it there, and I'll make that purple. So that was, in the past, the level that did the trick. You got that oversold, especially if you got divergence. And so, but most important, again, is price action first and foremost. And what I can tell you definitively is that I think that's a very valid and clean trend line. And I can tell you definitively that we have solidly broken it. And there is a next to a 0% probability that sell signal, this breakdown candle is going to close. This weekly candle is going to close back on or above the trend line. So in other words, that's another FANG has bitten the dust, or another Mag 7 or whatever you want to call it. And again, they're slowly checking the list off, slowly but surely. And again, we need Microsoft, Amazon, and Alphabet, and Nvidia. Nvidia is it's given us, I already showed you, it already has given us some sell signals there, and it's well off the highs. Broadcom, really it's not mentioned in the, a Mag 7 anymore. Formerly, everyone, I think everyone's acknowledged, Tesla's no longer magnificent, but it is bigger than Tesla. And it is a semi, so it's worth mentioning. And here I'm just adding this line on my weekly. There's your support level, price support. But it already put in a divergent high. Like a lot of things, remember, a lot of semis put in bearish engulfing candles. I don't know if this one in particular did, but it did print a, oops, I'm moving my lines all around, divergent high back here. Resistance is about 1400, and then it's kind of doing what a lot of things are doing. They're in a trading range, and bulls expect, and they may see it, and then I'll have to acknowledge it. A lot of this stuff that's in these trading ranges, including Microsoft, that they break to the upside. This guys, I just don't think it's going to happen. There's just, these charts are so darn bearish to me. And they're weekly charts. Remember, well, that's a daily. This is a weekly chart. And you just have to be patient on these things. It's weekly charts. They take a while to play out. There's no guarantee they're going to play out. But there's the targets I've given you. And so 1,200, I'm going to round that up to make it an even 1,200. Everybody loves their round numbers, right? Oops. Delete 1,200. There it is. 1,200. Enter. 1,200 goes. There'll be a hiccup along the way right here at about, what is that? 915. But first target's 813. That's going to be from, if you short the break of 1,200, that's going to take you down 32%. get a reaction there, tradable reaction most likely, and then T2 that'll be about 45% drop. And last time we had weekly divergence, and it was only on the RSI, not even on the only on the PPO, but the stock still fell. This is just ballpark, about 36%. Oh, and then we had a divergent high right before COVID hit. Like I said, COVID may be considered a black swan event, and it may have been random, but it wasn't random that everything was priced in for bear market at that point anyways, and COVID was just the catalyst. Okay, monthly chart. It's not been trading too long. This stock came public in 2009, so you don't really have a long term to go to. You need to see, usually I like to see decades of price history to use a monthly chart accurately. You just don't have enough candles. Tesla, I don't know. There's not much to say about Tesla. It's a kind of a has-been, at least has been for a while, well off its highs. Really not much to add because this one's already rolled over. Okay, guys, I'm going to leave you with one last one. I'm just jumping over. I could show you the bull-bear sentiment, as I have recently, rolling off levels that have preceded other corrections and or bear markets. And it's abated certainly with the recent correction, but that's what it does. You get to the extremes and the correction or the turn comes. And whether it's over or not, time will tell. You know my thoughts. This is, and I've shared this before, I'll just bring it up again. It kind of dovetails in the comments I made earlier when I turned on popped up the window to play CNBC, stream it off my, from the Thinkorswim app, and they had a couple analysts, or I don't know if they were analysts or no, it must have been money managers. I don't know who they were, talking about so-called experts, pundits talking about Microsoft and Alphabet, and the guy made the comment that it didn't matter that the rest of the S&P, the earnings are basically flat, looking for 3% growth, because Alphabet and the big fangs are big tech looking at 40% growth, and it's okay if those stocks single-handedly carry the indexes because they have the biggest weighting. And talked on that many times in the past. Anyways, this is QQQ up top. So you're looking at QQQ here. Let me change the color on my tool. QQQ. And then down here below you have this says NAA50R. That's the percentage of stocks in the Nasdaq composite that are above or below their trading above their 50-day moving averages. And this is the NAA200R. So this line tells you here the percent of stocks in the Nasdaq trading above their 200. And as you would think, theoretically that has to be bounded by 0 and 100. You can never have less than 0 or more than 100 stocks trading above or below their 20-day or 50 or any moving average, that is. So you're going to hit a range. You're never going to have them all. So the range, the high end, they're scaling here, putting about 90. You get almost an extreme up to 90 and down low. Okay, so what's the takeaway? Quick takeaways, guys. This is the 50-day, the 200-day moving average. Very, very important. If there was probably one single moving average and it was all I was allowed to ever use in my analysis, it would probably be the 200-day. It does a great job at finding primary trends, particularly in the tech-heavy indexes, Nasdaq 100, and a lot of tech stocks. And so I have a line I added at 50 because that's the 50% mark. So if you're at 50%, it means half the stocks are trading above their 200-day moving average. The other half are below it, right? Well, since this peak right back here, we crossed below that line right before. This was back in 2021. And we started dropping down below there. And then the market peaked right after. And things got pretty ugly. We rallied up. And you can see rejected, 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 rejected. So this whole time, and the reason I've been looking for the top and, it's fitting in with my, hey, this is a bear market rally. I don't care if a few stocks have made a couple indexes make new highs. The vast majority of stocks, as I've covered many times, are not. The vast majority of stocks in the stock market are still in bear markets. And again, their weightings just don't matter, even though it's the majority. But this also shows you in the Nasdaq, and it's been plummeting lately, but we couldn't get above 50%. So this whole rally, again, I've been talking about, we saw a little reprieve in the QQQ, the equal weighted indexes and SPY and QQQ, but it was a brief dash for trash kind of thing where people are bottom fishing. But again, if it was a true healthy rally, you would have seen at some point, especially including now, or recently, you would have seen at least, moving well up into the above 50% on the 200-day. And you look at right now, the percentage of stocks trading above their 50-day moving average. This is an end-of-day chart, so it reflects as of yesterday's close, but that was 40.5% yesterday on the 200-day moving averages, trading above, so meaning 60% of stocks are trading below their 200-day moving average. And then on the 50-day, 31% trading above their 200-day moving averages, or roughly 69% trading below. And then you can see my lines on the chart. I love me some divergences, whether they're bullish or bearish. They really are great predictors because they're just showing you which way things are moving. And so many people get caught up on the current trend and not looking to see when that trend's likely to end. These are, this is a big part of my trading. It's very contrarian because I tend to catch tops and bottoms. And, so it doesn't always work, but when you get in early, it's very profitable. If you wait for all your sell signals and moving averages to confirm, by the time you flip positioning, if you've been bullish and long a trend, and by the time you realize, or you wait for Kramer to come on TV and tell you we're in a correction or bear market, so sell your stocks, it's too late. And it's certainly too late to short. That's usually when the first bounce is coming, by the time the masses on the media, on TV get, bearish. And then at that point, you sell your longs and then you go short, and then you're shorting right into the first bear market rally. All right, so the takeaway here, guys, look at these divergences. Each and every one. You can freeze, screenshot this. I've covered this chart many times in the years. When you start seeing the indexes moving up in a clear deterioration or negative divergence between the stocks trading above or below, or trading above their 50 and 200-day moving averages, it's super clear, crystal clear. And the bigger those divergences are, just like leading into the top in 2021, typically the bigger the drop is, right? It was about a 38% drop in the Nasdaq 100. And you can see all along, and this is why I've been not looking to get, late with them. Don't get me wrong. We've had plenty of longs. We've covered shorts along the way. We've had short trades that we did, and then we got in, we covered a reverse long. But this is why I keep talking about the bigger picture and waiting for the turn. This is big divergence that really started. Here's the thing. Hopefully you can see this. Let me zoom in. Let me do this. Yeah, I can zoom in and then scroll over if I can do that and show you. Okay, so here we are. This is what I wanted to show you right here. I had to zoom in, so it's cutting, darn it, it's cutting the top off, but let me try this. So there's the top. This is the most recent thrust in the Nasdaq. Here's our little, so far, relative, I'll call it little correction or little pullback bulls are buying. This is our divergence line. And if you note down below, so look at this steep advance coming. Remember how strong we were in the first quarter of the year and heading, really not the Nasdaq, more the S&P. The Nasdaq had most of its strength there last year, the second part of last year. But you can see that the divergence has gotten really steep. We were diverging, and then all of a sudden it's just fallen off a cliff. What that means, again, is breadth has deteriorated on that massively into that. We were in that trading range. It was showing you everything. A lot of things were breaking down, moving down, and Amazon, Alphabet, especially NVIDIA, they were lifting the indexes, given this guise of strength that really doesn't exist in the underlying market. So this is not subjective stuff here. This is factual. You can pull these numbers yourself. Now, anything's possible, but to not see, again, these divergences are not commensurate with what's the drop we've had so far? 8%? What did I tell you the other day? I think 8% in QQQ off the highs, off the post-Fed highs. To the lows, yeah, it's right about 8%. When you look at that chart, it is not, an 8% drop is not commensurate with the scope of those divergences. We're looking at a drop that's going to measure well into the double digits, in my opinion. All right, that's it. So we covered the long-term charts. I told you I'd update QQQ. It's not done much. It stopped going up, but it's not really going down much. I started out with, that 5-minute chart. Here we are. I can't keep the video going forever. There's still an hour and 15 minutes left in the trading day. And again, First and foremost, let me just end the video saying we haven't even made a full back test to 433.70. In fact, there's that trading range we had, that consolidation after 433 broke down. And remember, on my 60-minute chart, it's at 433.70, but I keep calling it 433. And so far, that's where we stopped. So this would help. The bigger the fade is today, I mean, God willing, if they can fade it all the way back to 425. But remember, it's Friday. Whatever you take home today, even if you are a futures trader like me, whatever you take home, you're stuck with. For a futures trader, you have until Sunday night, and then they start trading again. QQQ, you got to wait till Monday morning. And, and bulls want to see, and maybe they get a big gap up into 433, a gap and run, not a gap and crap. That's why I said I'm not going to react initially. If we pop 433, I'll give you my thoughts. But like I said, I don't think we're going to get all the way there. Came close, but no cigar so far. I'll wrap it up here, get the video out to you guys. Have a great weekend, and we'll pick it up on Monday.